What's going on, everyone? Welcome back to the channel. In today's video, we're going to be talking about the Pulse USD price, and more specifically, its 200-day moving average and its 150-day moving average on the daily time frame. Make sure to subscribe, leave a comment below. Check out lightbeam.xyz, my newest Pulsechain block explorer, and also check out cypherus.io, my newest service to help you build your dream website. No coding needed. Links in the description below. So if we look at the Pulse USD price on a daily time frame, there are a lot of different time frames, a lot of different indicators you can use to analyze any chart for that matter, including Pulse USD price. You could look at the Pulse ETH ratio, you could look at the Pulse BTC ratio. You could do a lot of different things. But today we're going to keep it very, very simple and just look at two of these specific moving averages, like I mentioned, the 150-day and the 200-day, just to look at historically what has happened in the past 2 years that Pulsechain has been live and what we might be able to expect in the future. Obviously, none of this is a guarantee. So the first time that Pulsechain, PLS specifically, reached its 150-day moving average, it was just printing it for the first time here around 4 zeros and a 7. Right? And for brevity's sake in this video, instead of saying 4 zeros every single time before a number, let's just call this 7, and we can call the number up here, for example, 20, and so on. So I don't have to say 4 zeros and a 7, or 3 zeros and a 2, just to mentalize it a little bit better, right? So the first time that Pulse reached its 150-day moving average, it was reaching this 7 level, right? And it got rejected. It came back down to the 5.4 level. And if we look at that date and price range, we can see that that was a 32% dip after it got rejected for the first time by this orange 150-day moving average. And then what happened next was we got a bounce. All right, we got a nice bounce. We came back down and we grinded on this level here above and beneath the 150-day moving average or so, right? Let me take off my magnet. Got rejected, came back above it, back below it, back above it, back below it, back above it, back below it, to it, rejected, double bottom, back above it. So we sort of oscillated around that moving average, give or take some percentage points. And then what proceeded to happen next is where it starts getting interesting and where we start including our 200-day moving average. We came up to that at around the 6.4 level, got rejected from that one as well, but then proceeded to find support finally on the 150-day moving average. So what happened the next time? Or I should say what happened after this. After we found support on the 150-day moving average, we all know what happened from there. We went from this 5 level all the way to this 15 level, so about a 3x, and ultimately went all the way up to the 20 level, which is in grand total from this low right here, support on the 150-day, 4x, right? So you could have sold on a double or sold on a double. Price went up a lot, and that was good. That was awesome. We love that. Now, what happened the next time? Get rid of some of these. So the next time that Pulse went beneath its 150-day, it bled for a long time, right? Around here, it was barely printing, and we had already bled. So we couldn't really see that price action relative to that moving average because it didn't exist yet. But the structure is more or less the same, right? Big bleed, come back up and test it. Same thing, right here in September of 2024. Not that long ago, just about 8 months ago. That's a while ago. Feels like a minute ago. What happened? We got up to the 150-day moving average, and we got a little above it with some wicks here and there, but ultimately we got this mini rejection, right? And it's definitely not as pronounced as the rejection from October of 2023. Way minimal, right? From here, back in 2023, we almost doubled from this low, right? From like the 3.8 to the 7.6 level-ish. And again, that was like a 30 to 40% dip. But this time, the pump was a little smaller. It was about a 50% pump. And we didn't get as big of a dip afterwards either. I'm actually curious if the ratios are the same or similar. I haven't checked that. Let's just do it as an exercise here. 90% pump followed by 32% dip versus over here it was about a 50% pump or so, so roughly half. and the dip from the wick to the bottom was about 10%, right? Less than half of this, like a third of this dip from back here. So definitely less pronounced pump, less pronounced dip, but more or less similar structure, right? And then what happened after that rejection and that low? Okay, that rejection and that low. Well, remember back here we oscillated around the 150 day for a bit before getting rejected by the 200 day and then finding support on the 150 day. This time over here was a little bit different, right? We more quickly got to the 200 day moving average and got rejected by it. And you could say it's a similar situation to this moving average, the orange one, where the red one hadn't printed any candles yet. It hadn't printed any data yet. It didn't exist yet because you need 200 days of data to get a 200 day moving average data point for the first time. So you could argue that's why, but every time is a little different. As you've noticed, they're not exactly the same. But this time, our moving average already existed, our 200 day. And so we swiftly got rejected by it, oscillated. I wouldn't even say oscillated around that. I'd say mostly just got rejected by it. You know, kept hitting lower highs here. But look what happened next. When we found support on our 150 day, the orange curve, we did get rejected one more time by the 200 day. Ultimately came back down to test the 150 one more time before we had a nice run up, a little over 2x. So let me just, for clarity's sake, let's gather our bearings. And where are we? We are comparing this right here to this double bottom right here. Support on the orange curve after getting rejected by the red curve. Support on the orange curve after getting rejected by the red curve. And then a pump, right? Over here, again, 3x to 4x. Very nice. Even if you sold on a 2x. Or a 3x or a 4x, you could have bought back in lower in any of this region here. Truly, any of this region over here. This entire region, right? My ugly circle. Could have bought back lower. So, what am I getting at? Well, look where we are now. Today, we have been getting rejected by our orange curve, our 150-day moving average. That's nothing new. It's happened twice. 32% dip over here after rejection. Over here, just about a 10% dip after rejection. And so far, from the wick of 4.2, we are down to 3.8 or so, have gone down to 3.7 or so. So that's already a 10% dip. So it's very similar to what happened back in September of last year. However, you could argue that since this pump was pretty nice, almost a 2x from this low, even more from here, right? 2.5x, a little under 2x, a little over 2x. So we can just average and say there's a 2x pump right here. In that sense, it's more similar to what happened back here in October of 2023, where it was close to a double, and that was followed by a 32% dip. So if we do what we did back here, September 2024, then this dip is over. It's done. And we move higher to the red specifically, to 4622. If it's more similar to back here in October of 2023, then that would be a 32% dip, which would put it closer to about 2.7. Now, some people would call that bearish, but if we do get rejected from here, that's obviously a more neutral case, because the bullish case is we just break through, we hit red, and then we start repeating what we did over here. And I'll get to that case in a bit. But the more bearish case, in the short term, would be we get rejected from this 40 level or so where we've been hanging out now, and we go back down to the high 2s or the low 3s. The high 20s or the low 30s, I should say, to remain consistent. So around this level or so. Interestingly enough, that could correspond to tapping this uptrend, right? If we came back down here, the low 3s, that's close enough to what happened back here in October of 2023, and then we could arguably continue higher. Maybe continue either battling the orange curve and oscillating around it like we did over here, or go straight to the red curve, which might be a bit lower than where it is now. If that were to happen, it might, instead of being 4.7, it might be 4.5 or 4.4 or something like that. or it could even correspond to this level of 4.2. So I guess to rehash, we have a few scenarios that could play out, and obviously all of this is speculation. I'm just going based off of the short history of the pulse chart that we have. And I guess my more bearish scenario is getting rejected, coming back down to the low 3s or the high 2s. Low 30s or high 20s. I want to remain consistent with what I'm saying here. But even then, if that were to happen, I would consider that, again, not financial advice, I would see that as a decent buying opportunity relative to, you know, all the other levels we've seen, because that would also correspond, interestingly enough, to this low, right, that we formed over here. So there's a lot of confluence of support, in my opinion, in the high 30s, or the low 30s, excuse me, if we were to go there. If we were to go there. Now, for the part that everyone loves, is the more bullish case, which is we got rejected by orange. The dip is more like September of 2024, where we just dipped 10%. That dip is done. After that, we go back up to red, which would be over here, you know, about 20% up from here. Get rejected by it, come back down to orange, tighten between red and orange, like we did over here and over here, tighten up between those two, find either a singular bottom, like we did over here, or a double bottom, like we did over here, on the orange. Whether the orange curve, you know, is coming back down here or so. Get rejected by red, come back down, find a double bottom, or a single bottom, and then we move up. And again, how much we move up is up to anyone's guess. Back in early 2024, like I said earlier, it was a 3x to 4x pump. Very nice. And back here in November of 2024, it was about a 2x pump, which is also very nice, a little over 2x. So then you could say, okay, then, you know, the 80s are in the cards, which should correspond to pretty much the highs we had late last year. These highs. You could say, if we do tighten up price action between red and orange, and it mimics what it did in these last two mini cycles, then yeah, these levels are in the cards. And this is just that first level. That would be about a double or so. And if it did play out more similar to this gigapump back here in January 2024 to March of 2024, then we could be looking at a 3x to a 4x, which would put it, you know, what is that? Closer to like 135 to 180, which corresponds more so to levels like, you know, this, or where's 180, or this, you know. So, and I'd love to see that, right? I love Pulse. I hold Pulse. I would love to see that, right? So, in short, Pulse doesn't have too much history other than these past 2 years, but it's enough to at least notice patterns. And again, I'm going to do further analysis videos on the Pulse ETH ratio, the PulseX ratios, the Hex ratios, and other ways of looking at the PLS USD price and this chart. But this is just a very, very simple way. Not many trend lines I'm doing here other than that quick analysis I showed you here of it corresponding, or rather aligning, finding confluence is the word I'm looking for, right? I use that upwards trend line to analyze that part of it. But in general, the majority of this video has just been analyzing price action with respect to these two very simple moving averages, right? So that's the video. Again, I hold Pulse. I love Pulse. I would love to see the ecosystem grow. Prices continue to rise. Hopefully, Bitcoin can cross all-time highs. Ethereum crosses all-time highs. And those definitely play a role in the price action of other coins, such as the Pulsechain ecosystem assets. But for now, we'll just wait and see, right? Be smart with your money. Make sure to only take as much risk as you can afford. And yeah, I hope you enjoyed the video. If you want more analysis like this, leave a comment down below. And again, check out lightbeam.xyz, the newest block explorer for Pulsechain. And check out cypress.io, my newest web development service to help you build your awesome sites. And you've seen what I can do with sites like Pulsechain and whatnot, so, or with sites like Lightbeam and whatnot. So I appreciate you watching, and I'll catch you in the next video. Peace.